Cryptocurrency exchange Bybit disclosing on Friday that it was hacked in what could be the largest crypto heist ever. Join us right now to discuss the crypto market and what's just happened. Anthony Pompliano is the founder and CEO of Professional Capital Management and author of How to Live an Extraordinary Life this week. Anthony is hosting New York Bitcoin Investor Week, which we'll get to as well. Good morning. So how much should we worry about the safety or security, if you will, of crypto after this situation?
Well, look, anytime that you have a hack, people obviously get worried about this. But the way that I describe it, the Treasury and the Fed has never been hacked. The further you get away from the creation of the money point, then you get less secure. Banks have been hacked, armored cars have been hacked, or people have had money stolen from their wallet. Same thing in crypto. The blockchain itself, the Bitcoin blockchain has never been hacked. But if you go and you take that and you put it in an exchange or you put it in some sort of custody solution, those can get hacked. And so I think it's important to pay attention to. The most impressive part to me, though, was this was a $1.4, $1.5 billion hack. Customers obviously were worried. They ran to the exchange. They withdrew $4 billion. No problem. And so obviously the exchange had the money. Right. Usually what we've seen is when these things happen, the exchange gets caught, not having the money or there's some sort of issue. But I think that really the system kind of worked how it was supposed to, and now they're going to work to try to recover that $1.4 billion that was taken from them.
What are you thinking right now, just in terms of price of Bitcoin? We keep looking at it. It's off the highs. Some people have talked about it going to $250,000, $500,000, $1 million. Where are we on that journey, if that journey is right? We've had other people come on and say there's a floor at 70,000, and we still have these big debates about strategic reserves being built, but we also have big questions about what the Federal Reserve is going to do.
So I think if you look trend, not specifics, right? Everyone's going to come out with these price targets. I have no clue where the price is going to go in terms of exact number. But what I do know is that in these bull markets historically, we've seen very big drawdowns. In 2017, Bitcoin went up about 20x, but there were 6 different drawdowns of 30% on the way to that 20x in a single year. What we've seen lately is actually those drawdowns are much more muted. So you're getting about 15% drawdowns. And so what that tells me is, one, there's a persistent bid for people who want Bitcoin. But second is that there likely is going to be less volatility to the upside as well.
Right.
Now, the beauty of Bitcoin is that less volatility to the upside means that maybe we go up 10x off the bottom.
We just talked about it last week, Anthony, that finally it's acting like something that almost could be used as a currency because it's been 95,000 basically for 8 weeks. Do you think if the Fed doesn't cut this year, is there any reason for Bitcoin to go out? It's so, I mean, it just, to me, it looks like every time it looks like an easing cycle is coming, that's when it goes. And when it looks like it isn't, even though it's counterintuitive because you get a hot inflation number. That's why you supposedly own things like gold and Bitcoin because of inflation. But a hot inflation number means the Fed doesn't cut. So, yeah. and then Bitcoin goes down.
Yeah, there was this great study done by this guy, Sam Callahan, and what he basically said was Bitcoin is the most sensitive asset to global liquidity. So global liquidity is really, really important to pay attention to.
Well, that's just a risk-on thing.
To a point. Now, the other thing I'm paying attention to is this idea that's being popularized by Jim Bianco, which is the Mar-a-Lago Accord. And basically the idea is that the dollar's too strong, and instead what we're going to use is we're going to use tariffs, we're going to go and we're going to use the sovereign wealth fund, and then we're also going to get payment for security. Those 3 things, the general idea is to reduce the debt, get interest rates down, and weaken the dollar. If you're able to do that, I think that would be very good for Bitcoin and for stocks. And so the question is, how successful are they going to be in implementing this plan? We know the sovereign wealth fund is coming. We know that they're implementing the tariffs. Can they get the payment for security in Europe is another question. But I think that these are all things that they're trying to do, and that would be good for asset prices.
The SEC dropping its case against Coinbase. How significant is that in terms of what you think is a relatively, I imagine, hands-off policy at minimum for the crypto industry, at least for the next 3.5 years?
Yeah. So Coinbase specifically, I don't think many people were not buying Coinbase stock because they had this lawsuit going on, or this regulatory issue. And when the lawsuit was dismissed, you didn't see a big pop in the price or anything. So I don't think that from a company perspective, people were really worried about it. It was kind of par for the course. If you were a public company in crypto, you likely had a tussle with the regulators. But what I do think it does is it signifies a changing of the guard, right? You're going to drop this and they're saying, hey, moving forward, we're going to create clear rules and regulations. We want to actually encourage this innovation. We want to be supportive of the industry. And so the dropping of that case is
and that's
a
large part because the industry decided to support Trump and put a lot of money into this administration.
Look, one of the
behind this administration.
Yeah, one of the weird things about, I think, business and finance is people have become much more political. And when I get asked why did people become more political, I always say that I don't think business and finance people were more interested in politics all of a sudden. I think what happened is that politics and regulators started to meddle in business and finance, and those people realized either we start to participate here or we're going to get steamrolled.
What do you make, though, of just a broader conversation about money in politics? Because clearly the money is what's had a huge impact, right? There was not a lot of money going into, the Biden administration, and they had whatever their view was of crypto. Now there's an administration that had a lot of money put behind it.
Yeah, money in politics is a really interesting thing because on one hand, you have the person who actually raised less money and spent less money became the president in this election. But on the other hand, definitely money is something that is going to change people's mind. But I think that the more important thing for Trump and his administration is that they all actually own these assets. If you go through the cabinet, if you go through a lot of the nominations, they own Bitcoin. And so
is that not trouble you, though? Because I think that you and others have come out quite publicly and said, there have been questions about Nancy Pelosi and her husband and questions about all sorts of folks in Congress who have owned different stocks or assets. And people have said this is totally wrong and totally conflicted. Now this administration owns all of these assets and everyone's like, it's fine. And actually, it's a good thing because they understand it better now.
So that's a double-edged sword, right? I actually don't think people have a problem with politicians owning stocks. One of my favorite stats is Ken Langone once gave an interview, and he said that his average holding period is 42 years. People aren't really worried about what decisions he's making on a day-to-day basis. I think the problem that people have is when you're actually actively trading around certain events that are occurring. So it's the action of trading versus just holding for a long term. Same thing with Bitcoin is if we have people who are actively trading Bitcoin based on different things that politicians are doing, I think that would be a problem. But if people are just buying, holding, dollar cost averaging into...
How do you feel about meme coins then? President and the president's wife?
Yeah, I think that meme coins are a pretty big distraction from what actually is going to end up being the work that people need to focus on. And you see that, Strategic Bitcoin Reserve, I don't see anyone talking about putting meme coins in there. I think that there is an understanding that there's kind of an entertainment angle to a lot of this industry. But the really serious people, the people who want to go and actually have a positive impact on the country and on the economy, they're focused on Bitcoin.
We got to go. What you got this week, though? Just 30 seconds.
Bitcoin Investor Week. We've got a great lineup of folks all week long. It is the largest collection of sophisticated investors trying to learn about Bitcoin, and hopefully we'll figure out some banks and stuff that are doing more things with Bitcoin.
Great. Thank you. Appreciate it. Good to see you. In the meantime, we've got some breaking news right now from Robinhood. Want to get straight over to Kate Rooney, who joins us this morning. What's going on?
Andrew, good morning. So the SEC is now dropping its investigation into Robinhood over its cryptocurrency business. The brokerage firm just saying that the agency sent a letter last week explaining that it had concluded its investigation and does not intend to move forward with an enforcement action. This does follow a Wells notice that was sent to the trading firm in May of last year. Those typically inform a company or a person that they are under investigation and they tend to come before a lawsuit. Robinhood's chief legal officer, Dan Gallagher, who was also a former SEC commissioner, saying in a statement this morning that, quote, "We applaud the staff's decision to close this investigation with no action." And he says this investigation never should have been opened. Robinhood Crypto, he says, always has, always will respect federal securities laws and never allowed transactions in securities. He also goes on to say, as we explained to the SEC, any case against Robinhood Crypto would have failed. He says, we appreciate the formal closing of this to fairness at the SEC. This is, guys, the latest win for major cryptocurrency companies in this new administration. Many backed Trump's campaigns, and you're seeing a lighter regulatory touch here. Companies had a pretty tense relationship, to put it lightly, with the former SEC chair under Biden, Gary Gensler. Many complained of what they called regulation by enforcement instead of the agency setting any type of clear rules or guidelines. It does follow the big news, guys, last week with the SEC dropping its lawsuit against Coinbase. And Brian Armstrong talked about that with you guys. Crypto, it's becoming a bigger part of Robinhood's business as well. Crypto transactions were up about 700% when they last reported for the fourth quarter, at least. It was a huge driver of revenue in that quarter. Stock, last I checked, was up slightly, almost 3% pre-market, guys. Back to you.
Kate, so here's the complication, and I'm curious how you think about it. On one side, it may very well be that these enforcement cases and investigations were wrong-headed to begin with. That may be. I have no idea, right? And then on the other side, we're seeing that most of the crypto industry spent an extraordinary amount of money to get this new administration into office, which is now dropping these cases. And so there's sort of this very interesting question about the credibility, both of the initial decisions and what drove those, but also these decisions and what is driving them.
That's key context here. I mean, it's Coinbase especially. I think Robinhood was less active on the lobbying side, but Coinbase led this charge really against the former SEC. I mean, Gary Gensler really became an enemy of this entire industry. So I think there was also sort of this grassroots individual investor animosity towards the agency, which I think the Trump White House has sort of picked up on, not only from a fundraising perspective. You could see it as pay to play, and I think that would sort of raise eyebrows. But at the same time, I think there was this sentiment among individual retail investors that, call them securities or not, want access to these more speculative assets, meme coins in some cases, and they want their brokerage platform, Robinhood in this case, to be able to list them. So I think there is also the big picture political stuff, but a little bit of a grassroots sentiment side of this that is also worth taking a look at. Their big thing was, are these securities or not? And that rule goes back almost 100 years. So they were sort of fighting over this SEC rule that none of us ever think that much about, the Howey test. But it's a big win for this industry, regardless of the political landscape. They spent the money, and you're seeing it pay off, a month or so into this new administration.
Kate, want to thank you. Appreciate it.
Thanks, guys.
Before we head to a break, take a look at shares of Strategy, formerly known as MicroStrategy, in a new regulatory filing. The company saying it has completed a $2 billion offering of 0% convertible senior notes. Those are due in 2030. It used those proceeds to buy $2 billion worth of Bitcoin at an average price of $97,500 of that stock. The stock up marginally, about $302 right now. And take a look at the price of Bitcoin. We're sitting just about $95,600. Coming up, we're going to talk about Warren Buffett's Berkshire Hathaway stacking more cash on the pile, a record $334 billion of it. We're going to get into his latest moves just ahead, and former Treasury Secretary Jack Lew on everything from DOGE, taxes, and the state of the economy. Squawk returning after this.
In his annual letter to shareholders, Warren Buffett discussed several topics, including the country's growing fiscal issues. He gave advice to the Trump administration, and he looked back on his 60 years at Berkshire Hathaway. Joining us right now to break down the letter is McCrae Sykes. He's Gabelli Fund's portfolio manager. And Mac, let's talk through maybe the results first, because they also released their quarterly earnings at the same time. There have been a lot of notes out on Wall Street this morning on it. Most of them point to the strong underwriting performance of the insurance companies, strong profits overall, and then UBS is actually raising its estimates and its price target on the B shares to $557 from $536. What are your thoughts just about the performance of the company?
Right. It was actually a pretty good earnings release. So there's 1.44 million of the A equivalent, trading over 720,000. So it's a $1 trillion company, as you know. Last year, the insurance between the income and the underwriting increased about $8 billion year over year. So that boosted results to $47 billion of operating earnings. You combine that with investment gains, book value rose $88 billion to $650 billion. Imagine these numbers. So that's 16%. It's pretty remarkable for a company of that size. And so on the operating side, doing well, obviously, with the investments, and then they're sitting on the cash. So the one thing that I think disappoints investors, but really shouldn't, is the buybacks, and he hasn't bought back stock since May. The last level there, about 627,000 per A share. So that's down 10% from the current price. So that's something to look forward to in the future as he puts the cash to work.
Okay, that cash, let's talk about it. $325 billion. Yeah. It's the largest cash pile that any company, any public company in history has ever had. It's greater than if you even add up today's numbers from Apple, Microsoft, and Alphabet, and they all have some pretty big cash hoards. Right. What do you think the plan is behind that? Why do you think he's doing it?
So I think there was a couple of idiosyncratic components to it. He's wound down a lot of the Apple position, Bank of America. So that's, those were two things, contributing to that cash. Plus, last year they generated $30 billion of operating cash flow, which was about $600 million per week that would end up on his desk to be allocated. So this is still a very strong cash-producing enterprise. But this is all a good thing. I think people do get impatient in the short term. And, if you go back to a few of his letters a few years ago, he talks about, really rare opportunities coming around, every 5, 10 years. And so, look, we just have to have faith in the system. It's worked over those 60 years. And he has some great managers below him that'll keep that doctrine. And so this is a good problem to have. And, if we look back at 08, 09, there was a time when they really accelerated capital. They went into Dow, Goldman Sachs, Mars, et cetera, and they actually reduced their cash balance below that 20 billion threshold. So there was a time when they put capital to work, and it certainly measured,
So basically, he's
returns.
looking around thinking that prices are pretty expensive, including his own stock, which he's not buying back either.
Yeah, I mean, so it's trading at 1.5 times tangible book value. So, clearly it's a level, it's kind of the higher, but down 10% is not unrealistic in this market, which has been pretty volatile, as you know. And look, there could be other events that we don't know and have shown up in history. So I think he's well situated to take advantage of that.
One of the things that he pointed out in his annual letter was just this idea that Berkshire Hathaway paid 5% of all total corporate taxes last year. That's kind of an astounding number.
Right. I mean, that's a testament to what he's built and his team and all of the asset allocation over the years. And I think he's proud to be able to contribute to the corporate. And he's talked, in past letters about corporate responsibility for our overall budget of the U.S. and contributing that and, making sure there's opportunity for other people as well. So I think that's just a testament to the progress that the firm has made.
I mean, I guess the message he had to Washington was spend it wisely and make sure you protect the strong dollar, too.
Right. So he kind of snuck in some of his own, I would say, political views and fiscal views. And, he does that very delicately and responsibly. And I think it's well heard by the world.
Yeah. What other takeaways did you have from the letter itself?
Well, what's great about this big hoard of cash, it's just advertising. Everybody's debating it, but there's a lot of private companies out there, and I think the Forest River anecdote that he brought up about this owner-operator having done really well in the business, adopted this entrepreneurial philosophy in terms of his salary relative to Warren's and how that business has done very well, and that's a sign to, hey, Berkshire has the capital, they have the doctrine to do all this stuff and execute for you, and also do well with the stock price as well.
You mentioned some of the management. He did say that it's not going to be long before Greg Abel is the CEO and is writing the shareholders letter for the company.
Right, and he talked about his health there a little bit too, as a reminder of kind of the physical limitations as well. But again, Greg Abel just, he brings that presence, he brings that entrepreneurial thinking, and I think could ultimately be a better potential operator than Warren in some ways in terms of commanding the discipline and the accountability from the subsidiaries.
Mac, want to thank you for coming in today.
Great, thank you for having me.
Good to see you.
Coming up, 5 former Treasury secretaries recently penned an op-ed pushing back against DOGE. Former Treasury Secretary Jack Lew was one of those members. He joins us next to discuss the payment system and so much more. In a recent New York Times op-ed titled "Our Democracy's Under Siege," 5 former Treasury secretaries wrote about concerns over efforts to undermine the nation's financial commitments. We have one of the authors with us this morning. Jack Lew served as Treasury Secretary under President Obama. He's now a professor at Columbia University. And we welcome him to the broadcast. Good morning. It's nice to see you. Just take us behind the scenes in terms of your thinking to put this together, to contact all of these other Treasury secretaries. Who said yes, who said no? Was there sort of a thought?
Did you call any Republicans at all to do it, Jack? I guess.
I think it's clear who said yes. The 5 of us signed
5
it.
Democrats.
And with a pretty broad range of views on a lot of topics. So bringing the 5 of us together is not a small thing. And it was rooted in a concern for the most basic core principle. I mean, as Secretary of the Treasury, as the piece says, each of us took an oath to uphold the laws and Constitution of the United States. Part of that is that Congress has the power of the purse, and there's a concern at the time, and I think still, that that is being challenged. There's also a concern that our payment systems are very complicated. They contain the most sensitive personal information about every one of us and every American. They contain national security information, and how they're handled has real consequences in terms of personal and national security.
Have you or anyone that signed that discussed any of this with Scott Bessent? current
Personally, others have. I should say I didn't organize the letter. There were a lot of conversations. I'm not sure who actually did organize it in the end. It was a shared concern that we needed to speak out on something that might seem a little dry, but is pretty basic. And the third point I would make in terms of why is the notion that the United States pays all its bills is pretty fundamental. It's why the full faith and credit of the United States is trusted all over the world, at home, in every household that depends on a Social Security check or any other payment from the U.S. government. Putting that into question in any way has consequences that none of us fully understand because it's never been challenged, but they're serious.
So how much is your concern about, and I don't think it is this, but looking for the efficiencies, if you will, versus how these efficiencies are being examined and then what happens or around the process?
I don't think there's any concern, at least on my part, challenging the government to be more efficient. I spent most of my professional life trying to make different parts of the federal government more efficient, work better, provide better service. Those are laudable goals. The question is how you do it. And if you break the system as you do it and put people and the nation at risk, that's not the way to do it.
I mean, this is the first time that anybody's really gone in and decided to look at the sort of line items via the Treasury, right? Like historically, you would go to the different agencies and maybe you could look around and maybe you could figure it out, maybe you couldn't. This does seem to be the most efficient way to at least get at the underlying math.
On the surface, I see the logic to that, but that's not how the system works.
How does it work? I'm totally confused by it because it sounds like it's an antiquated system. There's all these different payment systems. None of them work together.
It is an old system, and it's the largest payment system in the world, so it's a complicated system. But the responsibility for basic program decisions and integrity is not made at Treasury, except for the very limited number of programs that Treasury runs. It's made at each agency. The law is made by Congress. The agencies execute it. The only thing that happens in the payment system is matching up names to people who are on a no-pay list for some reason because they've been sanctioned or found criminally liable. That's a mechanical process. Treasury doesn't have the skill or the people to do the program work. It's not Treasury's job. For 80 years, this was run by non-political career professionals whose job was to make sure that the bills were paid, they were paid on time, they were paid based on the instructions given. There are things you can do in the agencies on program integrity. As OMB director, twice, I did a lot of work to try and improve program integrity. A lot of things we're hearing about program integrity are exaggerated and incorrect. I mean, you have to ask the question when we're seeing that a lot of the numbers that are tallied up confuse millions and billions. How much accuracy is going in to this kind of SWAT team that doesn't understand the complicated system and thinks you can approach it in the way that they're doing? I think that there's going to be more of that because I can tell you, having spent most of my professional life in the system, it's really complicated. Would it be good to simplify it? Yes. Can that be done in a week or a month? I don't believe so without breaking it.
Jack, the age-old question between Democrats and Republicans is, I guess, spending versus taxes. And I just have a really fundamental question. I saw some of your notes talking about if the Trump tax cuts were extended and how expensive that would be and how economically disastrous that would be in your view. And I'm just back to wondering what the right method. I mean, I look at what happened with the Biden administration. We were at $3.5 trillion during the pandemic, and briefly he got down to $1.3 trillion for a deficit. Then we were right back up to 1.7, and in 2024 back to $2 trillion, basically. And that's just layering on more spending. Whether take your pick, the IRA. Any of those things. Why is that better than trying to keep taxes for corporations lower, for individuals lower, keep it in the private sector, leave it there, and cut the spending? Why continue to ramp up the deficit why is that a better method?
So, Joe, I'm one of the few people who has been consistently saying we have to worry about our overall fiscal posture.
So the Biden administration did not do that.
In either a Democratic or Republican administration. I'm the only OMB director who's had 3 balanced budgets and surpluses. So I respect fiscal discipline. What I don't respect is pretending the tax cuts don't cost money. You look at extending the Trump tax cut, the savings that are in these budgets would barely, under pretty strained assumptions, pay for them. And then they provide room for another $4 trillion of deficits where there's magic savings that would reduce it to, call it, 2 or 2.5 trillion.
In 2017,
that is not a question.
Didn't corporate revenues, weren't they at an all-time high following the tax cuts of 2017? Aren't we?
The things that drive corporate revenues are a combination of things, macroeconomic conditions. I will say that this administration inherited a very strong economy, but when you look at what the cost of a tax cut is, it's projected by models that look at how the economy
functions. In my mind, that doesn't sound normal, that the cost of a tax cut. We should start with that I haven't paid the taxes yet. You need to justify the spending to tax more.
But Joe, if you care about a deficit, a dollar of spending and a lost dollar of revenue have the same effect. You have to borrow a dollar to pay for it. So if your concern is the total debt and the annual deficit, you have to care about both.
But you see how Republicans and Democrats just talk at each other about this.
Believe me, I've spent 40 years working.
What do you make of writing the taxpayer a check in the form of effectively a refund or a dividend or something? Obviously, you'd be borrowing to do that.
First of all, you haven't paid any of the bills to do the new tax cuts you're talking about. So how you decide to do that on top of other tax cuts,
don't you think that
the numbers have to add up.
The push to do that is to make this effort more popular? Isn't that what this is about?
Sure. Everybody likes to get a check in the mail. It's not hard to be popular saying we're going to send you some money. The question is, where does it leave you overall? If it leaves us deeper in debt with more borrowing, then it has the same effect as spending.
Can I ask you a different question, which is, here you are being very public about your concerns about what's going on inside the Treasury. There is an argument to be made, and I just don't know if you've availed yourself of this or have tried and it hasn't worked, but whether it's better to make have these types of conversations privately with the Treasury Secretary, with people inside the administration, or is your view that they are not taking your phone call or that they would otherwise not engage with you?
Look, I've always believed in having private conversations. I don't think it's to the exclusion of having public statements. We were very careful in that op-ed not to make any accusations about the current Secretary of the Treasury or what they're doing. What we've said is we were never in the position where we were asked to do these kinds of things.
Right.
So we actually tried to be very respectful, and I would be happy to have a conversation with anyone from this administration who called me for advice. I've reached out to people in some areas.
When Scott Bessent says that technically the payments have to go through the Fed, and that they're basically getting the Treasury is sending instructions to the Fed is the one that's actually making the payments, and that therefore whatever's happening over here on the Treasury side can't actually have a demonstrable impact. I mean, that's what he's effectively trying to say. You're saying you think that's not true?
The Fed operates based on instructions that are sent from the Treasury.
Right.
So the instructions that go to the Treasury then get paid by the Fed. The Fed is a ministerial agent.
And so when we hear, for example, that the state of New York or the city of New York is not getting the $80 million that they had been pledged, in fact, somehow the money was taken back, that's the kind of thing
I think that there's many things going on at the same time. The freeze on federal spending that has been on and off, the memo that went out, there's a lot of confusion. And I know that there's a lot of areas where money is not flowing normally, even though there have been courts that have said it should flow at least for a period of time. I think this is going to get sorted out in the courts. It's going to get sorted out as things settle down. But right now, there's a lot of confusion. The thing that I'm concerned as kind of a blip, because you can't do it every year or else you won't have any assets left. I don't think it's a long-term solution. It's a smoothing thing that has worked in many budgets. I can't tell you whether renting or selling. What I can tell you is that there will be a need for people to run programs, to answer telephones, to get people their checks when they're lost or something has gone wrong. Those people are going to have to work somewhere. So I would be careful about skinnying down so that if this process leaves us at a place where the public says service is not where it needs to be, we have some place to put people and not to create a kind of fact on the ground that, well, we have nowhere for people to work. Right. I understand in the modern economy you can have people work remotely, but that's not so popular now.
But you would let the tax cuts expire?
I didn't say that. I would be very careful about how I looked at which ones, if any, to extend.
And
I would ask the question, how are they paid?
Right.
I think the corporate tax was cut more deeply than it needed to be in 2017. When I was Treasury Secretary,
you're like 25.
I proposed a lower number, than the current number. There could be a serious conversation about where you balance. Ultimately, to have a balanced fiscal policy that leaves the trajectory of the deficit and the debt going down instead of up, we're going to need to have a bipartisan conversation where people talk about everything.
You must have taken issue with spending a $2 trillion deficit last year. Why? When we were under $1 trillion until the pandemic, under Trump, under Obama, what was your deficit? You had 500 billion? You know what it was.
I have to tell you that last year I was worrying. I was.
Oh, don't pun. Don't you pun.
In Israel, worrying about a war 24/7.
I was going to ask you about Gaza and what to do there too.
I'm going to take a.
Oh my God! I can't believe you punted on my 2024 question. Okay.
Yeah.
We'll let you do that. You did have bigger. Yeah. What a mess. And I just, what we just saw last week just infuriates me. It's just.
Hey, Jack, I know we got to go, but I have one Ukraine question, which is there's a big question about whether you think that when the U.S. has sent money to Ukraine, that should be considered a grant, as the president of that country says, or it should be considered the equivalent of some kind of loan, or that there should be some kind of payback when this is all over, and what you think that says about sort of this entire, I was going to say schism, but really war.
Look, I think it's a mistake to think about things like American assistance for Ukraine as something that we just do for others. We do that to defend our interests, to defend our allies in Europe. And I think that the terms of our assistance were clear at the time it was given. It is reasonable to talk about terms going forward, but I think the tone of that has to be respectful and mindful of the fact that we have very substantial benefits when we protect our interests in Europe.
All right. Jack Lew, thank you. Nice to see you, sir.
Good to be
We got a lot more coming up on Squawk Box right after this.